Can a piece of paper change everything? In this episode of the Flywheel Economics Affordable Housing miniseries, we explore how land titles, often just a single sheet of paper, can shape the success or failure of affordable housing. Land expert Andrew Smith brings insights from Nigeria and beyond, examining the potential of secure tenure to unlock investment, build trust, and protect the vulnerable. It's not where the housing crisis begins, perhaps, but without it, is progress just going to be too fragile? Join us today in the Flywheel Economics podcast to understand if a piece of paper truly can change everything. Welcome to the Flywheel Economics podcast. Flywheel Economics is a concept that proposes true, sustainable economic growth by viewing economies as ecosystems. I'm your host, Richard O.
And I'm your co-host, Favor Ogbadu. Together, let's explore a more sustainable and powerful way to view innovation, investment, and economic policymaking.
Favor, we're getting near to the end of our affordable housing mini-series. The end is in sight. How are you feeling about all these episodes we've covered?
It's been an eventful ride so far, quite compelling, all the topics that we have been able to cover. And there's this story that goes around about an elephant. Three blind men approach it and then touch it from different angles. And one blind man says, oh, an elephant is like a snake and things like that. But essentially what I'm trying to say, this is a long-winded way of saying that we have come at the affordable housing ecosystem through various lenses, and from touching different aspects, we are getting closer to seeing a more holistic picture of what affordable housing is actually about.
So hopefully we'll see that the elephant is an elephant by the end of all of this. That's a very nice analogy.
Exactly.
So we're in episode 6, which takes us to, we've covered... the first episode was with Ian Shapiro from Real. We looked at the whole affordable housing ecosystem with Ian, hopefully not mistaking it for a snake. We then went to Syntellect, and we looked at how some of their technology and using machine learning and AI could help some of those in the informal sector to access mortgages. We then went to our third episode, which was with housing finance expert from the World Bank, Simon. So Simon helped us to unpack some of the global issues around getting finance to affordable housing. We then went to Glenn, and we looked at blockchain technology and how blockchain could help unlock finance and get people into affordable homes. We went from Glenn to Olu, and Olu helped us explore the governance side of affordable housing and working with local governments, national governments, all that side of things. And now finally, we come in almost to land by looking at land.
Clever. I enjoyed that. Yes, exactly. What a journey it has been. And just as you said, I think the picture is clearer than when we began. And I think it's not too far-fetched to say that we have even more questions, not coming from the angle that we haven't understood, but just the fact that there's so much more to understand. And so it's been quite a journey, and it's one I'm happy that we have come on.
So maybe a bit before your time, Favor, but Donald Rumsfeld used to speak about the unknown unknowns. Do we know what the unknown unknowns are? So I think by at least going through these 6 episodes, we have a greater sense of what the previously unknown unknowns are, even if we don't know everything yet.
Yes, I think the equivalent of my time, as you put it, is you don't know what you don't know. But at this point, we have come to a point where we know pretty much, and hopefully our listeners have that same mindset about understanding exactly what the affordable housing ecosystem is all about, or at least what it looks like.
So who have we got today to help us understand land?
Yes, today we have Andrew Smith. He's a development consultant and an expert in land governance reform, and he sits down and he shares his expertise with us on the matter.
Well, let's hear from Andrew.
Hello, Andrew. Thank you very much for joining us today. So could you introduce yourself and share a brief overview of your experience in land governance and how it relates to affordable housing?
Hello, Faber. Hello, Richard. It's a pleasure to be invited to this discussion. So my background really, there's been a lot of work on land administration, land governance, land titling in recent years. So I really fit firmly into the niche of land administration. And so it's very much the bread and butter, bricks and mortar, nuts and bolts aspects around how we can apply all the work that's been done in improving land titling around the world recently, and begin to understand how that fits into the economic development systems within developing countries. So I've worked in various countries, primarily in West Africa, touched in the Caribbean, touched in Saudi Arabia, but my primary focus has always been really Nigeria.
Thank you, Andrew. So could you give us a bit of a flavour of why land administration is important for economic development?
I can try. I mean, I'm going to say at the outset here, I'm not an economist. I'm not an academic. I'm not particularly well versed in the highfalutin ideals. But I'll give you a background really on how land administration and land governance transformed the economies in Europe, and then it has a significant bearing on the approach I think that donors are trying to implement in developing countries. So from the UK perspective, we can go back to the 17th century, really, where it suddenly dawned on the British. And as we all know, the British were pretty good at commerce. We had a particular business model whereby we would come to your country and we'd kill you all and steal your stuff and then take it home and sell it. Or we'd meet you on the high seas and we'd kill you all and steal your stuff and take it home and sell it. And that was working really, really well for us. It was working really, really well for the government. But eventually, we had a minor revolt in Britain in the 17th century, and the merchant classes in Britain were beginning to wonder why it was that their counterparts in Holland were suddenly becoming very, very wealthy, and they weren't necessarily having to maintain a huge standing army and a huge navy. And every Tom, Dick, and Harry was able to actually, raise some money and do a business deal and start trading in the East Indies, the West Indies, and these city-states like Antwerp and Ghent were developing remarkably well. Their social cohesion was improving, land governance was improving, and so we sent a sort of a gentleman adventurer over to Holland, a man called Andrew Yarrington, to see just what was going on. And he came back to the UK in 1677. He wrote a book. Basically, it's an incredibly long-winded title, but the basic premise was, how to defeat the Dutch in war and in commerce with some clever ideas. And one of the fundamental things that he learned was that the reason the Dutch were doing so well in trade and commerce, and why the average merchant in the street, and effectively the whole middle class, was able to trade and to raise their wealth, was because they were able to use their land as security. So Yarrington came back to the UK and he said something to the effect that, no great thing can be done without a bank, and no bank can be of benefit to trade or the public, but where there is a registry. Because he'd realized that if we can use our property as security for lending, then of course it allows me to say, I've got a house that's worth £500. I go to the bank and say, you lend me £400. And if I don't pay it back, you'll steal my house from me and you'll sell it on to someone who is then going to be able to use that as collateral. So it set the basis for viewing property as a way to underwrite the issue of how transactions could be done and how commerce could be done. And we did pretty well out of it. And then, of course, the pressures in the UK started changing. We had the Industrial Revolution, and just as we have in Africa and South America, there was a huge influx of people coming into inner city areas. And so we had to start looking at how land governance could change and how we could actually manage the provision of housing, how we could manage the provision of services, and how we could pay for all of that. And so it became critical then to expand this issue of land registration into a document that was perhaps simpler to understand and simpler to transact, because all of the work that was done in the UK in the 19th century in terms of addressing shortfalls in education, in healthcare, in dealing with pestilential diseases like typhoid and cholera through the improvement of public works and drainage, etc., was essentially funded by the merchant classes being able to secure title to their property and raise funds. But the critical thing in a city, and it's something that we really perhaps have lost sight with, is that, of course, if I've registered my property and I'm sitting in a city which is expanding, the key thing is not only can I raise capital on that property, but of course I'm going to start paying my rent, my rates, my property taxes to the state. So suddenly local government has got enough money in the kitty to start paying for these public works, to start providing education, to provide healthcare, and to address some of these social ills which was holding us back. But the key thing to remember is that this ultimately, all of it comes down to a business case. There's a business case for a city to address education because, of course, we've got more industry, we've got more commerce, we need more educated people. There's a business case for you to address healthcare because if you can stop cholera epidemics, it means that your society can prosper. So the money that's put into circulation through the money that's not only being raised through the mortgage system, but also through property taxation, reinvestment, wages, personal taxes are all inevitably tied to this foundation layer of land administration. And so it's become quite important, and is a pop quiz for you. I mean, Richard, you're the expert here. What's the UK economy? Is it fifth largest, sixth largest at the moment in global terms?
Funny enough, the UK economy is one of the economies I follow the least. So I suspect you're probably ballpark right there, Andrew.
Yeah, I think it's six. So here's a pop quiz question for you, Faber. So our GDP is, I think we're probably sixth biggest in the world. It's important. As a percentage of our GDP, the reason that makes Britain wealthy and great and powerful, and how much of that GDP do you think is down to money held in mortgage debt and the servicing of that mortgage debt?
Okay, I'm just going to give you a wild guess. 12%.
12%. Fabulous. You are only 50% off. 60% of the UK GDP revolves around people servicing their mortgage debt. And of course, mortgage debt is more than simply me owning money on a house. It's the debentures that companies have on their non-fixed assets, etc. And if we take a step back again, 80% of British GDP is the service industry. But the majority of that service industry are the banks and the financial institutions shuffling that paper. So land administration is fairly important to the UK economy. Critical thing to understand is that the way that the economy runs is a business transaction. If I go for a mortgage, the bank doesn't just give me a mortgage because I've got a land certificate. It gives me a mortgage because I can demonstrate that I can repay it. The reason a state or a city or whatever wants to address healthcare issues is because there's a value proposition in that, which is why they invest their money to make their workforce healthy, wealthy, and wise, because they can contribute more fairly, and that could then pay for all the security issues, et cetera, et cetera. But this money that stems from property taxation, from the employment that derives from people using their money as their property as collateral, is what creates, a unified, albeit often stratified society, but it provides all those services which allow us to thrive. Now, again, I'm no economist here, Richard, but that basically is pretty much how a UK city would have evolved in the 19th century into what we have now. And I think it parallels very much the sort of scenario that we're facing in countries in Africa.
Well, thank you, Andrew. That was a really fascinating explanation and journey through history of how we've ended up to where we are today. Andrew, you and I first came across each other in northern Nigeria, and some of the work you were doing on the GEMS 3 program in Kano. Building on what you've just set out in terms of the importance of land administration for economic development, what were the kind of insights that you got from that work in Kano that might be along those lines?
Nigeria is very interesting because if you look at if we go back 400 years and consider the lowland countries in Holland now, you essentially have a city-state. You would have Antwerp, or you would have Zandvoort, or somewhere, and you look at Nigeria, and you've got Sokoto, and we've got Kano, and we've got Hadejia. So you have these long-standing trading centers which have been around for a very, very long time, looking to progress along a very, very similar trajectory. that these countries in the lowlands of Europe did, and very, very successfully. So there's a simple parallel, but of course the course has been plotted. So I think it's important to look at the way in which land registration strategy was implemented by the donors we'll stick to West Africa, but it's pretty much the same strategy everywhere. And to consider why it was deemed so important in the early 21st century, and then culminated in the time that I spent in Nigeria. So this guy, Andrew Yarrington, wrote this book in the 17th century, which basically said, if you use your land as collateral, the merchant classes will get rich. In the late 20th century, Hernando de Soto, a Peruvian economist, miraculously said the same thing. He said, basically, if we can secure tenure to all the land, then all of this locked capital in Africa and South America can be freed up, and everyone will be able to go to the bank, raise money on it, and get very, very successful. So there's a huge push by donors in countries like Nigeria to set up land registration schemes. And the numbers were huge. And, previous discussants on these podcasts have mentioned the Rwanda scenario. So teams went in to do mass registration of Rwanda, and they said, yeah, the whole country is registered. It's fantastic. And the whole country is titled. And we heard the word titled a lot. And when it was titled, people were told that they could then take out a mortgage on their property and then get rich. Now, of course, we need to look at something. If we go back to first principles of why the UK and Europe prospered, was because of land titling and the mortgage systems, which allowed people to raise cash. Now, the key issue, I will get back to a common sense answer now. The key issue in banking is the value proposition. So if I have a land certificate, if I'm living in Rwanda and someone gives me a land certificate and I'm told I can go to the bank and they will give me money, imagine my surprise when I take my land certificate to the bank and I say, give me the money that I've been promised, when the bank says, are you going to pay it back? What's your value proposition here? How can I repossess that property if you don't pay it back when we haven't necessarily set up a mortgage system? And equally well, I'm not just going to give you money because you have a land certificate, because you need to demonstrate that you can pay it back. So there's a critical understanding of what a land title is and what a mortgage is, which was something which became apparent was lacking when I eventually joined this grand scheme of land titling in Nigeria. And we did find some workarounds for it. But a land title, as presented by most of these mass registration schemes, is far beyond a red square drawn on a page with a couple of names on it. A land title has got three fundamental principles. There's the mirror principle, the curtain principle, and most importantly, the insurance principle. So the mirror principle simply means that if I'm holding a piece of paper, which I'm told is a land title, it means that someone has generated that piece of paper by investigating all the relevant facts around it. So I need to know if my next door neighbor has a right of way to walk over my garden path. I need to know if I'm not allowed to hold cattle on my property. Or I need to know something that's quite common in the UK is I'm not allowed to smelt steel on my property, etc., because that would conflict with somebody else's interest. So there are lots of issues which need to be on this land title. And also there are other issues which are not particularly important. So they're held behind the curtain, which is the curtain principle. Anything that might have happened on this land 50 years ago, 100 years ago, 200 years ago, doesn't need to be on the title, because the title simply needs to say that if you're going to occupy that piece of land and enjoy it, you're either going to have complete freedom to do so, or you need to do so in the understanding that your next door neighbor or the city council will have a call on part of it, but it's managed and it's defined in the law. And then most critically is that when that title is being developed, it has it complies with the insurance principle. It needs to be looked at in such depth so that all the risks have been evaluated. An insurance underwriter could come along and say, you're telling me that your property is worth £1 million, but these issues, these factors around it, it's you've only owned it for a year, so it's a bit dodgy, so it's not really worth £1 million because it's never been tested. There's a right of way over it, which means it's not worth £1 million. It's going to make it more difficult for me to sell it. But if you've created a genuine land title as we're told we have in, for sake of argument, Rwanda, that document should reflect everything that's of importance to an insurance underwriter, because they're the people that will go to the mortgage company, or they will evaluate the risks associated with lending. So there's a critical issue. Let's look at somewhere like what we found when the land had been registered in Kano, before my time, I hasten to add. A lot of land in Kano is occupied by, literally, you'll have somebody living in an upstairs room, which they enter via a ladder. So it's a unique way of living. It's a common sense African solution, and you'll pay your rent to someone. And of course, we come along and we give that person a land title. Brilliant. So they've got a piece of paper that we generated, and then you're going to take that to the bank. Now, imagine I've had my house registered, and my daughter's bedroom has been registered as an individual land title. And imagine this being a village out in the hinterland of Rwanda or something, where everybody is essentially the same family. I take my document of title to the bank and I say, I want to register this title because this is going to drive economic growth. The first thing the bank is going to look at is, if you default on that payment, what's going to happen to this property? Because rest assured, if my daughter has taken out a loan on her bedroom and gone to the bank and defaulted on it, you may be able to attempt to repossess that property, but no way anyone's moving into her bedroom and sharing my house and my space with me. So that property is completely unmortgageable, because nobody in a typical village in a developing world is going to want a complete stranger like me saying, I've reacquired this property because the previous owner defaulted. I want to move in. I want to live amongst your people, because I'm not welcome. It's it's going to be true of my house, and it's going to be true of any village. So you can't actually mortgage most of these properties. So they're not genuine titles. What they are is a snapshot in time. They would be the stepping off point, which could over time be developed into a land title. And so, of course, when we came to Kano, there's a very pressing issue. Kano is going to, triple in population very, very quickly. So there's going to be a huge pressure on urban housing. There's going to be a huge pressure on provision of jobs, huge pressure on provision of education and healthcare, and provision of infrastructure. And so what we found was that these documents of title that had been created were not necessarily going to be the panacea, because the banks didn't trust them. They hadn't been created with the due diligence that they merited. They completely followed the routine. We had the same people working at Gems 3 that had worked in Rwanda, had worked in Lesotho, worked around the world, and they generated these maps, but they were not bankable. That's the key thing. These things are not a bankable land title. But what we found in Kano, and we changed this system for Kano, and we thought this was quite clever. If you go back to first principles in terms of land registration, the key thing with land registration is it can drive the provision of healthcare, it can provide the revenue for the state, and all the questions that most stakeholders want to ask are, what's in it for me, right? So if you own your property and you're living in Kano, and I say, hey, I can give you a land certificate, and it's going to cost you $10, I don't want it, because as soon as I've got it, I'm going to start paying tax. And as soon as I start paying tax, I'm just going to be ripped off, because the chairman, the government, they're not going to really invest that tax back into the system. And then if you simply have a document that says this house is occupied by Favor and the house next door is occupied by Richard, and you want to look at economic development in the longer term and the provision of healthcare and education, it doesn't help me interrogate that land record, because what I need to know is, how many kids are there? How many old people are there? Where are the schools? Where are the hospitals? Who's got water? Who hasn't got water? So what we did for Kano was that we added additional demographic and social information to the land registration process, so that what other schemes did was knock on your door and say, hey, Favor, you live here? You own this? Yes. I'll shake your hand. I trust you. And I'm going to go away and I'm going to draw a line on a map. When we knock on your door, we'll say, Favor, you've been to school? What are your skills? Have you got electricity? Have you got light? Have you got water? Have you got a car? What job do you do? What are your skills? And we do that for every single house. in 3 LGAs. We register 110,000 plots, which represents about 1 million people in Kano. So we've got a snapshot of land titles. We are required to call them land titles. The banks don't want them because they're not really worth the paper they're printed on. But take a step back. If you've got a Chinese investor who wants to come to Kano and sell tuk-tuks, he can come to me and Tarani, and I can say, what do you want to do? He said, I want a brownfield site and I want some mechanics. And I can say, well, I'll look at my plan. These are all the mechanics. This is your brownfield site. There's 1 million people around you. 10% of them will buy a tuk-tuk. Your business case is this. We also looked at the way you can streamline property valuation and property taxation into a much simpler, more transparent form, so everybody gets captured into a cheaper system. It allows you to quantify the business case, because everything comes down to a business case. So you have a situation where a businessman can go to Rowney and say, I want to assemble tuk-tuks. And you can say, okay, this is what your rates are going to cost. This is where your workforce is. And the LGA chairman can say, okay, I want this guy, because then you're going to employ this many people, which I can move out of their unsanitary, polluting mechanics village, put them into this factory on a fixed wage, which means that they can suddenly access, potentially secure lending, et cetera, maybe not secured against their property as such, but we know where they live. And so in 10 years' time, if they stayed in that property and they've been paying their LGA taxes and they've got a job and they've got a wage, lick your fingers, make that a land title, because we've got sufficient evidence to justify it. But the critical thing is, you can take a step back again and you can say, how many children have we got that are in education? Where are the schools now? So DFID wanted to support provision of education for girl children. We can say, well, they're all here and there's no schools there, but this brownfield site could be redeveloped as one. And we progress. We can analyze the business case. We can tell you what the rateable value costs are going to be. We can tell you what the staff costs are going to be. We can tell you what the building costs are going to be. We can tell you what your access to market is, the scale of your market. If you want to go into Kano and sell tools for mechanics, I can tell you the best place to locate that, and I can give you an indication of the turnover that you're going to have. And we can actually reevaluate the way these local government areas are managed and transition them towards the sort of housing policies which will allow them to become very attractive investment destinations that can also address the urbanization of Kano without the need to spill out into the greenfield sites, which are going to be increasingly important for agriculture in light of desertification. So the land record that we created for Kano did allow sort of a much broader economic modeling opportunity to address, social welfare, education, skills provision. And we take a step back again. The reason you're doing this is because you can make a value judgment on how investable these various issues are. If somebody comes to you and says they want to build a rocket base, I'd say don't do it in Tarauni. And so the crucial aspect of this is that in Tarauni, I can model the way that society is going to evolve over the next 50 years, because I know the people that are there. I can identify the needs and identify the investment opportunities and the scale of those investment opportunities. And I can project 5 years down the line, 10 years down the line, which means I then have a fantastic investment promotion opportunity, which no other LGA has. So if you're going to come and work in Kano, I can identify all of the risks, all of the opportunities in this LGA, and I can't do it in the adjacent LGA because we don't have the land record. So we can't govern the land and we can't administer the land without the land record. But the titling is not actually that important. It's the data and linking that data to management of the land, which is important. So that really was what set the Kano model apart from the schemes that were done in say, Rwanda or Ethiopia.
That sounds like a wonderful benefit in terms of, commercially valuable information, which is out there, which can be used for urban planning and all sorts of different, very good public spirited uses, as well as the commercial ones. It did strike me, though, that, on this issue about going back to mortgages, you described the situation of your daughter in her bedroom, and whether she could take that title and then get a mortgage on it. Well, no, because in practice you're not. Don't we have solutions for that already? Isn't that like the distinction between like a leasehold and a freehold? Isn't that the kind of could that have been tried there? I mean, what made it so difficult to be able to make something economically, well, make it bankable, I guess, or the basis for a loan to be made?
Well, again, this has been picked up on previous podcasts. Mortgage finance is all about affordability. And a critical consideration with a mortgage is that if you don't pay, it's explicit within a mortgage deed that the lender can repossess the property. Now, for that to work in a country like the UK, there's a huge amount of legislation which supports the capacity of the lender to regain that land to use it for commercial purposes. I mean, this is the critical thing. The land should always be kept as productive as possible. So if I renege on the mortgage and you don't repossess it and my house falls apart around me, I'm not paying rent, I'm not paying wages, I'm not paying the mortgage company is losing money. So this huge amount of money which is in circulation in the UK derived from mortgages falls apart. So if we go to the Nigerian, we're sticking with Nigeria. So we registered all these properties. Now, a true land title can be repossessed quite readily if the institutional capacity and institutional mechanisms exist, but they don't exist in Nigeria. And the issue of something like a mortgage, it is affordable. It's cheaper because it's spread out over years and years and years. Because the underwriters who are going to oversee all of this lending are able to assess the risk. So they're going to think, is it low risk for me to raise a mortgage on a property in the city of Kano? Because I know I can repossess it and I know I can sell it on. Now, if they can't repossess it easily and the courts don't allow for that, and if, again, DFID has done a huge amount of work on multi-door courthouses and land issues and all the rest of it, a huge amount of the pending court cases in Nigeria, India, the developing world generally, arise, their land issues and their occupation and the ability to repossess that land. So a true mortgage, assuming under the current system, I'm a middle-class mechanic working for the Chinese businessman, and I go to the bank is going to say, we want 30%, ridiculously punitive rate of return. And of course, they want 30% because they don't know who you are. And they also know that there's no provision in law to allow them to repossess it. And equally well, if they do repossess it, are they sure they can resell it at a valuation when the valuation mechanisms are not effective and not efficient because those institutions are not being done? So all the risks to mortgages still exist. And if the risks exist, the lending is oppressive. So the only way to fix that really is over time, is to gradually reduce the risk of flight from the property by tying people to the property, by saying, yes, you've been here for 10 years, we're going to give you a land title, and now you can be confident that you can reinvest in it. And of course, you've also then got to build up the valuation mechanism so that I can be satisfied that if this person that's coming to me and said their house is worth 10 million naira is genuinely worth 10 million naira and not really worth 1 million naira, but they've got a dodgy friend to give a false certificate, so that if they do renege on the 10 million naira debt, I've only got an asset worth 1 million. And you've got to then look at how you can speed the repossession, because one of the fundamental things with the land administration generally is that you need to be able to deal with bankruptcy quickly. It's in the interests of the creditors. It reduces the risk. It's in the interest of the state because they can repurpose this land by regaining control of it to another borrower. If those mechanisms do not exist to de-risk the financial services market, then mortgage lending will always be expensive. And so, the GEMS project made claims. There's an issue here, and you'll see it across Rwanda, Ethiopia. The land registration project will go in, no properties registered, absolutely no properties registered. Let's not pretend there's no pre-existing land market and there's no pre-existing lending market. It may not be through the banks, but people only acquire their properties either by borrowing from family. But there's a land market out there, but it's unregulated. miraculously, DFID will go in there and they will say, we've registered all the land. And since we've registered all the land, we've decided to ask who's got a loan. So suddenly we can say, okay, you're now in title number 123, and you're telling us that you've now managed to raise a loan on your property. Brilliant. But you've raised the loan on that property not because of the land title. If that land title had existed or not 20 years ago, when this concept didn't exist, you'd have gone to your banker, who's probably in the same church as you, or in the same mosque, or a family friend, or you're a senator, and they'd have given you the money on the basis of the fact that you can demonstrate that you can repay it or you will repay it. So it's a fallacy to say that we've created a mortgage market in Rwanda, because we haven't. And in Nigeria, the expectation was that I would take my land certificate and I would give it to the bank as security, and they would put it in the vault and they'd give me my loan. But that's not a mortgage. It's an equitable charge. And if I don't pay that loan, the bank can't displace me from my property. They can keep the mortgage, they can keep the title deed. I don't really care, because it's never mattered. So there's still no mortgage system, and there was never an attempt to create a mortgage system, because if you think about the primary stakeholders in an effective land titling system, they are the banks, the commercial actors, and the relevant government agency. It doesn't need to be national. It can be local, but who is actually going to be directly impacted by a potential transaction in that land? Who's going to pay for it? The banks. Who's going to consider it? The insurance underwriters. Who's going to manage it? The administrators. So those institutions need to be considered. But what the FID and other donors have tended to do is pay surveyors to draw huge numbers of red squares on maps and declare them a title, but they're not bankable. But if the additional data was made available, over time, it would evolve, just as the UK evolved, just as Holland evolved, into a more secure form of tenure, which could be declared as a title. Because, well, the reason I have absolutely secure title in the UK is because the state underwrites it. We've got we used to have a really fantastic land registry system in the UK. Every relevant aspect of that title, every valid consideration was put on record. And if that record created by the civil service department or agency as it is now was wrong, and you suffered a loss, whether you're a bank, whether you're the owner, whether you're someone transacting that land, if it was wrong, the state guaranteed to put it right quickly. And so the state doesn't guarantee title in Rwanda because they weren't involved in the creation of that massive map. The state doesn't guarantee title in Nigeria because everything is so risky, because there are so many unknowns about land tenure that they can't afford to guarantee it. But take the Kano model, wait 10 years, and it could work.
Thank you very much, Andrew. I think you have really painted a clear picture about the influence that land administration has on the economy at large. Now, I just want to zero in about how do you think that secure land tenure can influence the development and affordability of housing?
Yeah, I mean, that's one of the most pressing issues facing developing countries at the moment. And I think, again, we have to go back to first principles, and we're not simply looking to provide secure tenure to land as a way to solve all the ills, but we need to understand how these how the culture is going to evolve over the next 50 years in developing countries. And I'll bounce back to Kano as that case in point. Now, there is going to be a need to provide housing and to redevelop those urban centres. If we don't look at improving the current offerings in terms of social care and social welfare and infrastructure in Nigerian cities, then there's going to be a real risk of decay, social and urban, and welfare decay over the next 20 years. Because the typical model that you will see that's likely to be promoted, even DFID or FCDO or whoever, the donors generally will say there's plenty of land on the greenfield sites around the outsides of these cities, and it's actually very, very simple to acquire that land and throw some houses on there. And we've seen the same thing in the UK, where we simply think, okay, we're going to make the housing affordable, because if it's affordable, then everyone can move in. Secure tenure is not guaranteed by those sort of systems. simply because secure tenure needs to be looked at more than simply as a land title. It needs to be somewhere that you feel safe in your home. The tenure of your land needs to be something that you can view as a legacy that you can pass down to people. If we build a humongous city of thousands and thousands of houses on the outside skirts of Sokoto or Kano or Zamfara or Gusau or somewhere, and we don't provide the essential infrastructure in terms of jobs, healthcare, travel infrastructure, etc., then these things will degenerate into ghettos, and you will simply have expanded the city without addressing the actual need to create, work and social reform. So I think moving forward, what I would like to see happening more often is to look at the holistic approach to how we are going to master plan these urban areas in a way that they can then utilize their existing brownfield space, and also, address some of the environmental issues which are inevitably going to be exacerbated as the population grows, which can have a huge impact on the health and wealth of the people living there. And we also start to think, how can we quantify that effect? If we can keep people healthy and educated for the next 20 years, that has an economic value. And if they're healthy and they have to live somewhere, they will begin to understand the trade-off, so that yes, we may have to redesign these cities and do away with the more polluting components of them, and rationalize the environmental impact that they're having, and transform that land into housing. If we're going to transform that housing and plan it properly, and the tenure is secure, we can start thinking about how renewable energy can be applied, because yet again, we can have the numbers. If we need to have heat and light to so many houses, what does that represent in terms of investment in infrastructure for renewable energy? What does that represent in terms of infrastructure for water reclamation and solid waste management, and identify what those businesses are going to cost and promote them as a commercial opportunity. And so that the issue of land tenure is fundamental to the business deals that will need to be done to create the wages which will drive down the risk to the financial institutions, and hopefully facilitate the provision of affordable housing. But there are situations which we can discuss in countries like Australia, where the vision of providing affordable housing, actually was scuppered, despite the best intentions of the politicians.
So are there special ways that land titles can be structured that would give them the best chance of then attracting finance for affordable housing, or is it all the same for whatever type of housing you're doing?
No. I mean, again, I would hesitate to say you can wave a magic wand tomorrow and make this happen. But affordable housing, again, housing is affordable if you can afford to pay for it. And I think that the Real highlighted the fact that affordable housing is not cheap housing that's freely available to everyone. Affordable housing is inevitably going to be at the service of I think they defined it the 20 to 70 percentile of the population who will have enough disposable income to make it happen. So, if for sake of argument, you're looking at a 10-year transition period to start granting secure title in a market, like the city of Kano, if we did the snapshot approach that I described earlier, we haven't done enough to grant secure title. We haven't done enough to bring down the cost of lending, and we haven't done enough to transform people's lives. What we have done is provide the snapshot to allow you to start planning for the future. And if for sake of argument, those areas that we've recorded are socially stable and economically active, and we continue to monitor them, and we monitor the people within them, we can start thinking about how we can transition those irregular titles that we've recorded. It's a recorded title, but it's irregular. But in the UK, we would potentially call that a provisional title, because we're going to look at it for 10 years. We know there are risks. Somebody might jump out from the wardrobe and say it's my property. If they don't, and if no one contests it in 10 years' time, and occupation is 9/10 of the law, grant them the absolute title that they want. And then that generates the sort of market where the more aspirational people will want to buy and sell. But because there's going to be more money and more education and more understanding, and ideally a more active financial market in land, the arguments around repurposing land in these areas becomes far more compelling. So that it becomes perfectly feasible for the state to say, okay, we know for the past 10 years that brownfield site has been underutilized, but there's a pressing need for us to build a school, build a factory, build whatever it's going to be. We've had 10 years to investigate that title. We now are pretty confident, based on all the conversation that we've had previously. What do we need to understand about that to ensure that is an absolutely guaranteed title that I understand, rights of way, rights of ownership, rights of restrictive covenants which may affect it. I can declare that an absolute title. And then suddenly I've got that microcosm where we can build the affordable housing and, put the renewable energy, put the water reclamation in there, make it a little Xanadu, because there is now negligible risk in that invigorated economic environment, so that if somebody does renege on the mortgage debt, that we can actually reclaim the land and sell it on, because it's an aspirational place to live, and we've had time to create the the regulatory structures to allow us to repossess the land. So it's important to appreciate that it's a long game, and it's this institutional capacity of other institutions needs to be built around it. And it's not a job for a surveyor, and it's not a job for a land administrator. There are lawyers and bigger picture thinkers who are able to plan, but all of their willingness to participate, is derived from the value addition that they will personally, achieve through it. But if you could create the business case to justify, the legal work, the educational analysis, et cetera, cross-fertilize that with the work that DFID is doing in terms of, security issues, et cetera, you can create this little pocket of land which can move on. And in terms of paying for it all, again, a lot of the discussion that's been going on previously on these issues around affordable housing, we say it's too expensive, it's not realistic. Let's go back yet again 200 years to the European approach to savings and loans. And if you work in the UK, everyone's heard of Skipton Building Society, the Principality Building Society, Bradford and Bingley Building Society, the Halifax Building Society. These were groups of people who got together and put a penny in the pot and built that pot up, so that when they wanted to build a property or something, they could dip into this pot, service the loan. Everybody benefited from a token uplift on their commitment in the pot, but ultimately their portfolio grew and grew and grew until they became very significant financial institutions. If you look at these urban centers in developing countries, there's absolutely no reason why they need to be dependent upon financial institutions over and above something like a savings and loan, which can be set up on the basis of a handshake in the back room of a church. But you just need to have some integrity and decency in the way that these things are applied. So all the issues of the massive burden of finance from the public banks or from the state banks can be sidestepped, but you need to also understand the risk, and you need to understand the commitment, and there needs to be a passion for making a change, and you need to understand that it's the long game. But we all know about Isusu and this other sort of irregular lending in Nigeria. The opportunity exists. You just got to scale it up, and you've got to address it in a credible business model, all of which derives from the raw land data that property recordation can give you. And again, I'll say property recordation for sake of argument. DFID went to Kano, and we could do 110,000 plots in 6 months with all this really, really rich data. If we tried to sell those titles, nobody would have wanted them because they weren't worth the paper they were printed on. But the data was absolutely critical. But if we'd understood the way society worked and, the economic driver that the land data represents, then you can start looking at these things in manageable, credible, saleable, investable building blocks, which brings in the private sector which creates the market economy that the land titling was meant to create, but will not achieve in developing countries unless we revisit the way that we do land titling. And the land titling done right takes years and is not cost effective and will not address the issues facing developing countries, particularly those looking at, huge population increases in the next 20 years, because effective land titling might take you 100 years. The raw data that can drive economic growth and give you credible investment opportunities can be created in an afternoon.
Andrew, I wonder just to ask you a little bit about how sometimes this work on land administration rubs up against culture and rubs up against communities that perhaps are less stationary in where they, if you think if the origins of a lot of this comes from within Europe and European history, whether Holland or the UK, or there are relatively few nomadic communities within Europe, right, who are going across, whereas seems to be quite a few more communities that would not, that would be nomadic, that would move across, move to different places. There may be historic grazing rights. There may be all sorts of communal land which is available. So how does this system, which is very much about, right, this is Richard O's plot, this is Favor's plot, how does that match up against cultures and communities where it's not about individual possession, it's the communities, it's the common grazing land?
Fabulous question. It begets another huge conversation and potentially a huge debate. I'll take a step back. If you live in a developing country and you commit to live in the city, and you're going to move from or you're going to move from the village and live in the city, there's a different set of rules. You're no longer home, in inverted commas, you're living under the rules of the city. So everything I've just spoken about can be applied to the city. None of it can be applied to the rural areas for the very reasons that you say. People are nomadic, things are not stationary. There is a cycle, and there is a recognized cycle, and there is a legal definition of these pathways and the routes that people will take. So in terms of the understanding of the land use, and I'm going to give a very simplistic differentiation between urban areas, like the cities, and rural areas, which are more typically, farmland, with the occasional small settlement, with the occasional transient people moving through. You need to develop a totally different system. Individual titling and again, I'm going to stick to, Nigeria. A rural local government area is typically going to have 100 villages, which might be, 100 plots of essentially 100 families with its own cultural norms, which are quite unique. And they are all sharing in what is essentially the socialist ideal. There's a lot of shared rights. There are shared opportunities for grazing, for use of water sources, and people will share fields. And it brings its own problems in terms of land use, et cetera. But we need to look at how we can create an economic driver for that community, and to create an economic driver which is inclusive and responsible and equitable for all people. So you'll appreciate that these people are massively vulnerable to elite capture, but with a huge impetus for impact investment and responsible outcomes. Is there a way that these locations can be managed? Of course there is. And so over the past few years, there's been a push for community rights recording. And typically, again, the donors push this and they say, we're very aware of the risks facing indigenous people in the Amazon, indigenous people in Africa. So we will go in and we will do a system of community rights recording. So just as they pushed for individual titling in cities and individual titling in these rural areas, they now realize that individual titling, because these plots are not bankable, they're not saleable, they're not mortgageable, and people don't want it because they share, because they've got a very nice little system, they've now realized that there's probably a better way of doing it. So what they will now do is institute a system of community rights recording, where they will go in and they will say, right, These are the shared areas. These are the common grazing areas. These are the pathways. We all understand now that our boundary can be understood, just as a ward boundary, just as a county boundary can be understood. We can define the area that we occupy, and they're unique in that, having defined the area that Faber occupies, and they can define the area that Richard occupies, unlike individual titling, they can actually overlap, because there's an area that Faber and Richard jointly occupy, because they share it and they shake hands, and there's no need for conflict. Now, can that be used to create the sort of economic investment model that I was discussing for an urban area? Of course it can, but it needs to take a step further than what is going on in the current approaches. So if I go to a rural community in Nigeria, and there's something that we did in Jigawa years ago, we were told to go and do a tick block exercise for DFID to register a rural community. And as we were going house to house, we realized that, every other house was selling groundnut oil. And we thought, well, what's going on with groundnut oil? So, we all make groundnut oil, and we're really good at making groundnut oil, and it generates a premium. So at the end of the exercise, we created all the certificates and handed them out. Everyone had their title deeds. Marvelous. But the more interesting thing was the fact that we had all these women very actively producing groundnut oil. Give them the mechanized equipment to process groundnut oil at scale, get them a contract with the local supermarket. Suddenly they've got people bringing in their groundnuts from other villages and processing the oil at scale. Suddenly they're buying more fields to grow more groundnuts, and these women become very commercially active. Suddenly they're paying for the school, right? So if you look at the snapshot that's achievable from the land data, if I register a community, currently I'm going to say, these people live here, and there's a lake and there's a forest. If I say these people live here, 6 of them make Maiduguri caps, 3 of them make a rug, 3 of them are very efficient at snail cultivation, you identify the actual economic activity that's ongoing there. You identify the scale of the land that is available there. You look at the skills of the farmers, and suddenly you take a step back again and you think, how can I promote this as an investment opportunity to an impact investor seeking to employ 100 women or 50 youths in a job? And you can say, actually, they need help to farm more effectively or to undertake light manufacturing more effectively. But I can identify all the risks. I can identify all the people, identify the risks, identify the transport network. And so therefore, if you're going to look for someone to invest in Nigeria, this particular community is the one to go for if you want to grow yams or process starch or have access to natural gas. But again, it's that stock take of what takes place. You don't need to draw a line on the map and exclude the Fulani herdsman driving his cattle through once a year. You simply need to do a trade-off and say, okay, every year you're going to come through. Normally you eat all my crops, but I'm going to throw all my crops oil into this particular area. You can manage your transit through. We'll shake hands. I'll buy some cattle that you've fattened up on my land, and you move through to the next place without disrupting me. So you can then negotiate a fairer use of the land without titling. You can negotiate more efficient application of the land to production. Over time, again, that's exactly what happened in Europe. Over time, those people who've been farmers for 100 years have suddenly got children who could be lawyers and doctors who will go and live in Lagos, and they will leave. Then that land, the people will understand the value of it, and the land market will change, and that land can be sold. But in terms of driving investment, you do not need to register title in rural areas. You just need the data.
Thank you, Andrew. That was quite insightful. And I know you've mentioned it briefly, but I wanted to just come back to it and ask, what role does the private sector play in ensuring that land reform translates into tangible housing outcomes?
It's all down to the private sector. This again is what's the value proposition that we can make to encourage the transition from the current system to the provision of housing. And ultimately, The private sector is reluctant to engage at scale in Nigeria, which is why most large-scale housing projects are funded by the government, but they're ill understood and ill managed and ill presented, and they're insufficient. Whereas the private sector, again, they're only looking at that business case again. They want to know, where's my profit, and how is this going to make me rich in the longer term? And they'll quite often they will have a fairly slow burn approach to how they're going to make their money. But if they can, create a mortgage system which is going to give them a continuous income over 100 years, they will support it. So the private sector needs to be assisted to understand the scale of the market in Nigeria, understand the importance of it, and with the increasing interest of impact investors, this is precisely the sort of arena that they should be going into, because if an impact investor has got the sufficient data to make an informed decision about a business case, they understand their overhead costs, they understand the potential size of their market, which is lacking at the moment. But once they can understand the data, using the sort of thing that we did in Kano, they are able to come in and evaluate what their short and medium term yields are going to be, what their implementation costs are going to be, but they also need certainty that the government structures are in place to enable them to provide that housing without too much meddling.
Andrew, going from the private sector now to government capacity, government capabilities, what sort of institutional capacity needs to be in place to do all this? So Kano have done provisional land titling, and it's in 10 years' time, perhaps it could then go on to full titles, whatever the right terminology would be. But what does the bureaucracy need? What does the administration need to be able to do all this properly in a way which could actually enable affordable housing in the future?
Yeah, these are the crucial questions. Now, again, I'll take a step back and I'll consider the way DFID approaches these things, and I will pass an observation on some of the commentary that's being made by other participants in your affordable housing series. There seems to be a belief that we must work at a national level or at scale and transform everything, and have these huge overarching policies which need to anticipate all the issues which are likely to arise, and they are ever changing, ever evolving, and extremely complex. The reality is, for the sake of argument, a local government area in Nigeria is set up as a way to self-govern and self-manage the challenges facing it. If you retrench and think, okay, how can I transform a single local government area, an urban one? I'm going to stick to the urban ones. But in terms of actually looking at the considerations which need to be resolved for reinvigorating an urban LGA, you need to have the capacity to value the land effectively. So there's 10 people who've gone through the course that you've set up in BUK, and they can create an effective valuation system, which is completely different to the current one, but we've proved it was completely acceptable and completely applicable to Nigeria, so that you can quickly value and keep that revenue flowing. You need to train people who are able to go door to door and do the property recordation. Again, the EU have paid for all those people, so that mechanism is already present. We need to have the capacity at local government level to be able to record the transactions. Again, we're not talking about creating certificates of occupancy, which need to be done by the Ministry of Lands and Physical Planning. These are local customary documents, which is what everyone's happy with, which don't impact on the Land Use Act, which don't cause any problems for the high impact, high difficulty senior politicians. It's simply maintaining a municipal record of changes in use and ownership, which will then factor into that essential land data to drive that. So that's another 10 people. Then you need to have people with the capacity to look ahead, to start planning, to look at changes in land use in an equitable way, and to understand the social impacts. Again, that's another course in BUK, supported by maybe DFID. You build that capacity so that that LGA can be managed. Another 20 people, a couple of managers, but then most critically, you need to sit down with the investment promotion people, and that capacity is sorely lacking, and the strategic thinkers, and they're sorely lacking. I don't think there's any lack in economic analysis capacity in Kano. There are some very clever people within the academic world who can look at, can project, can crunch some numbers, and then the key thing you need to do is present the business cases for all the scenarios of how this data might be applied to attract impact investment. And you need to sit down with the impact investors and understand what their interests are, what their vision of change is, what their theory of change is, and find a way, ideally, of presenting this vision in a way that is amenable to them. But then ultimately, it's a question of getting around the table and seeking, free, prior, and informed consent, which never seems to be pursued in these sort of issues, so that we all understand we're on the same table. We all understand the risks to these changes in land use, these changes in approach, these changes in policy. We need to understand that, we're not facilitating elite capture. We need to have transparent financial mechanisms. But we also need to understand that if we get this right, the cost of doing business in that LGA diminishes. The standard of living rises massively. We registered all the land in Rwanda, and for the following 3 years, the human development indicators dropped. Right, so land registration is inconsequential. It's responsible investment that is going to be the key to driving this forward, and that responsible investment is reliant upon a foundation of effective land administration, and land governance is the consequence of sensitively applied impact investment. But it all comes down to creating the business case and the business model and the risk analysis. And every time you're presenting a business to an impact investor, we should be able to say, we've evaluated the risks as we see them. We've identified the financial implications. We're prepared to, underwrite it in some way, which can be, financial or social or tax relief or whatever. But we will all work together, to create a more coherent, more cohesive outcome. But it needs to be, you look at this as a modular thing. If you can create the capacity required to transform 10 city blocks and it works, then you can scale it up. If you look at it as what's required to develop an entire country with the different situation that's implied, or that's required for Port Harcourt, which is different to, Kogi, which is different to Sokoto, that doesn't work. Break it down into a manageable building block. And you could do, every city at once, but there's no one size fits all scenario.
Thank you very much, Andrew. I think you've done such a good job. My next question is related, and I think you've touched on it already, maybe just to get any additional points. And that's specifically what government and policymakers can do in integrating land titling into broader housing and urban development strategies.
Again, there's the issue. Government is a huge monster that moves extremely slowly. Your solution to housing is only going to be solved by the private sector. And so what the government needs to do, and it probably does need the big hitters, the economists like Richard, to sit down around the table, and they need to understand the implications of all the issues that we've been addressing, and finding a way to free up some of the restraints which face the private sector's ability to access land in the right place. And they need to move away from this belief, which is usually the knee-jerk reaction in most developing countries, to discard existing development and go in pursuit of virgin territory to build these utopias on. Because when you start building onto the greenfield sites, which are ever diminishing, you're reducing your capacity to provide food, and also you're creating a huge environmental hit in terms of transport and access to the work, which usually sits within the inner cities. And quite often you are proposing buildings which are needlessly oversized. So you need to have some sort of policy to demonstrate that fresh thinking is required. Nobody wants it now, but I assure you that in 20 years' time, Kano will be 10 stories high, because it has to be. And people will accept it if their quality of life is good enough. At the moment, they want a garden because they've got to grow some food somewhere, or the toilet doesn't work, so they'll use the garden. But if you get the infrastructure right, there's no harm in going up, as long as you've got a job to go to and, a distracting hobby. So government needs to be more realistic about the land it has, because everyone will say there is a limitless land in Nigeria. Well, I think you'll find your national border very much defines that you do not have a limitless land. And within that national border, the desertification is diminishing that land massively. And so you need to look at a rational land policy based upon allowing the private sector the opportunity to reinvigorate the existing urban landscape, and to allow impact investors to collaborate with the rural dwellers to improve food production, to meet the inevitable rising needs of this growing urban population, which will need to be fed.
Thank you, Andrew. Let me ask you a rather blunt question for our podcast miniseries. Are there any international examples of where land titling has successfully facilitated affordable housing development?
I cannot pretend to know every instance of all the land titling projects that have gone on. If I was a betting man, I would say no. There are issues in the way in which land titling has been applied. So for sake of argument, that the whole basis of the De Soto argument was that we create a land market through titling, which allows people to, raise money on the land and then become wealthier and move up and scale up and trade and buy until eventually they can move into a bigger house and be happy. So we've done a lot of work in terms of registration of slums, and we've done these mass registration schemes in terms of Ethiopia, Rwanda, Lesotho, et cetera. But what has not been done is the provision of affordable finance anyway. There's no example of that in any instance that I'm aware of. I will wait for someone to come back and educate me. But in the absence of affordable finance, affordable housing doesn't happen. And I can offer you an example, not in the developing world, but I'll offer you the example of Australia, where house prices in Australia were astronomical. And so the government made a very concerted push on building more houses. Now, in the good old days, in my youth, house prices were pretty much set at 3 times the average wage. Obviously, there were very expensive houses for people who had lots of money, who inherited, but most people getting onto the housing ladder, the wages was the key thing. And so, you couldn't sell your house for £1 million because it was only going to attract somebody of a certain standard of a certain status who could occupy it, and they were only going to earn a certain amount of money, and so the house was limited by that. And so the expectation in Australia would be that if we built cheap housing, then it would be possible for people to access it on, let's say 3 times their wage, and over 20 years they pay that off and they own the house. So they built these houses, and of course then the banks will simply say, well, we've got a nice sensible society here, so these people are actually going to be living until they're 70. They can pay a mortgage for 50 years. And if we do the metrics on that, instead of that property costing 3 times their annual salary, we've done the maths on this based upon, health projections. They could pay that mortgage off over 50 years, and the price of the house could therefore be 5 times their salary. So suddenly it's not affordable anymore. It's still ludicrously expensive. And that's the risk you're going to see in the attempts to focus on providing affordable housing through land titling, is that you start inviting in the financial institutions who, even though the properties may look affordable in the short and medium term, that the titling hasn't actually helped anyone to get on the housing ladder. It's still only going to really serve, the elite with a small e.
Thank you so much, Andrew. So just flowing from that, what are the key takeaways for stakeholders aiming to leverage land titling as a tool for affordable housing?
I think the key thing to think about really is how you are going to transition, who are the likely recipients of affordable housing? They are going to be the aspirant urban dwellers who are trying to move up the social ladder. So they're a key demographic that you can look on, that you can focus on, and they're a policy that you can develop around the provision of services to them. And again, you can look at the metrics that are available, and you can see how they're going to potentially have an impact on your government area. So if you want to attract these people to your location, you know what sort of services you need to provide, you know what sort of houses you are going to need to offer to them, you know the sort of trades that are going to be involved in creating those houses. And then you've got to think, if these people, if we can attract these elite with a small e classes of people to the table, what impact are they going to have on my local economy? And then you have to start thinking, okay, in that case, I will start surrendering land or repurposing land to attract them to that location. But that's about the only way that you're going to deliver affordable housing is by very actively targeting your demographic, the potential people that you want to repurpose the land for.
Thank you, Andrew. My final question will be, how do we ensure that land governance reforms are inclusive, equitable, and supportive of sustainable housing development?
Again, we're back to the fundamental thing as far as I'm concerned. It is all about the value proposition to attract the impact investors. I'm quite cynical about government. I'm not sure government is going to have the best interest of the people in terms of delivering, socially responsible, environmentally responsible, equitable outcomes. The impact investors are, and the principles that they're guided by, the principles of ethical investment, are essentially a repurposing of the wording in the voluntary guidelines on responsible governance of tenure. So the guidelines that govern the way land should be used, it mimics the way that impact investors would choose to use the land and would choose to develop society. And of course, the advantage is that they have got the money in the bank to ensure that they will make money in the longer term, to reinvest, to scale up, to replicate, to do this across Africa. So what we need to do is find the right political partners to open the door to the right impact investors. And once that money starts flowing, that money is the only thing that is going to persuade people of the need to move away from current approaches, because we're going to demonstrate that catalytic sum of money from the impact investor delivers the revenue and the broader funding to allow social growth.
Favor, that was a immersive experience going to all aspects of land administration, land governance, which I didn't even know that I needed to know. And so when we spoke at the beginning about unknown unknowns, I feel like there were a lot of unknown unknowns that I had before this episode, and perhaps a fewer now that we've spoken to Andrew. What really stood out for you in this episode?
Yes, exactly, Richard. You've said it all, and I know a lot of our listeners might be unaware, but my background is law. I'm actually a lawyer, certified to practice in Nigeria. And one of the things we are taught in land law is just the amount of land dispute cases, which I believe Andrew alluded to during the interview. And those cases arise because we refer to it as perfection of your land documents. And so you perfect your document when you register it. And so a lot of those disputes arise because somebody's land title is not registered, and so he gets and he sells it to 4 people and he collects their money, and they realize that they have been given, all of them have fake titles. None of them actually own the land. The highest that they do own is equitable rights, but that doesn't amount for anything. The land is not your own. And so listening to Andrew taking a deep dive into the issue of land administration really brought back all those memories from land law. And I find this episode with Andrew to be extremely thought-provoking. Just some of my key takeaways, which is the fact that a title to land does not automatically translate to a mortgage system. I thought that was quite fascinating, that you have a piece of paper does not automatically mean that a mortgage system has been created. Ultimately, there are nuances to it, and it's a matter of time, and a diligent approach must be taken also another point for me would be the fact that in developing countries like Nigeria and other countries where there's no strong system of land administration, it is important that the emphasis must be on gathering the kind of knowledge that will be valuable in decision making. He made reference to the snapshot that the land title that they hold actually is more of a snapshot. But why it is valuable is that when investors come in, they're able to look and say, okay, where's the school system, where's the residential, where's the commercial? That is what at this point that developing countries need to focus on, or countries without proper land administration need to focus on. How can they put together information that is important and can drive private sector investment? And I think that brings me to my next point, which is the point of the private sector. I remember that Andrew emphatically said that it all comes down to the private sector. And you will recall that in our previous episode, Olu had mentioned that the government must be the leader. And so I don't believe that these two statements are contradictory. Actually, I believe that they are intertwined. And that is because of the fact that, yes, government must act as a leader and provide a conducive environment for the private sector to thrive. The private sector are the one with the money, if we're being honest. And so governments, in playing their own leadership role, is in providing a conducive environment for the private sector. And how do they do that? Going back to my previous point, they do that by ensuring that what they are able to map out is valuable information that investors can come and take a look at and are able to make their decision. And this is, to me, is a stepping stone, just as Andrew said, that maybe in a decade, then we can begin to see a functioning mortgage system. But you don't jump from having a piece of paper and say, oh, we have done it. It's the foundation. A foundation has been laid. And then you take a look at it and say, okay, what can we do with this foundation? How can we build on it? How can we use this snapshot of information to launch into a working mortgage system? Back to you, Richard. What were your major takeaways from this episode?
Yeah, thanks, Favor. I think that's very thoughtful, your thinking around the things that you've digested from this episode. I mean, I would just go back to our original teaser for this episode. Can a piece of paper change everything? And I think it's clear, listening to Andrew, that the answer to that in itself is no. A piece of paper by itself can't change everything. And the value of that piece of paper in a land title is only reflective, I guess, in terms of all the institutions that are built up around that, whether that's the court system, if you need to make a challenge because there's a dispute over that land, whether that's the degree to which there is that enforcement, whether there's also your ability to go to banks to leverage that, and there's enough trust that the banks could claim that title. I mean, it's fascinating what Andrew was setting out in terms of this, that it has to work. The paper is valuable because it has the backing of these institutions that have grown up around it. And if those institutions are not developed and not functional in a timely way, then the value of that paper is minimal. And so there's no shortcut here. I think that was what I'm taking away from what Andrew has said. There's no shortcut by just issuing lots of pieces of paper that suddenly we can unlock this investment into housing. That it's got to be, it's a harder game. And that's perhaps realistic. It's also a little bit disheartening because we're all the time trying to say, how can we solve this problem? How can we quickly get in and solve this problem and take it to scale? But what I would say is that, I was also struck by Andrew's reflections about maybe this isn't something that's solved at a national level. Maybe what you do is you start solving this at the local level to start with, and you go to some of the places where these institutions are already more functional, more formed, and you start there in terms of solving these, getting this private investment into housing. And then you can expand to other areas, and then you create a model which other parts of the country can potentially follow. So I don't think this is a hopeless episode. I think it's just a realistic episode, and you can't shortcut your way, with a piece of paper to get a solution to all of this. It's got to be about a functioning government side, and that very much is is along the lines of what Olu was telling us in the previous episode, right? About the importance of government leadership. It's the importance of that institutional development as well in terms of supporting land reform. So, really nice episode, Favour. Any concluding remarks from you before we wrap up?
Yes, just to say, bringing it back to our core principles here at Flywheel Economics, you mentioned the fact that there's no shortcuts. The piece of paper doesn't automatically translate to the results I would hope to see. But it's not hopeless, because when a gardener goes in, just as we view our economic policymakers, and then they begin to take these steps. Of course, if you plant a seed and you wake up tomorrow and see a tree, you're running away. You're not going to think that that's normal. So the same thing, it's not hopeless. Rather, it is hopeful that I am taking my steps today so that down the road, 10 years or how long it will take, I'm going to see results. But you will be hopeful because you have taken those steps. So I think instead of feeling like, oh, it's such a long time, how about we begin to sow those seeds that are very important so that we can be filled with hope. You can't move around and just hope. That's not hope. That's wishful thinking. Hope is only hope when you have taken those steps. Would appreciate if automatically everything could happen overnight, but that's not how life works. But we can continue to walk in hope because we know we're taking those steps. So it's a matter of, are those steps being taken?
Thank you, Favour. So I think going back to your introduction where we spoke about the blind man feeling the elephant and coming up with lots of different animals that he thought he was feeling instead, or multiple blind men doing it. I mean, I think we have the shape of the elephant with these 6 episodes, right? We're starting to at least see it. It might not be absolutely high resolution, high definition picture, but at least we've got the basic shape. And I think it would be really nice to conclude the mini series with one final episode just to bring it all together. So please, listener, look forward to our final rounding up episode of the Affordable Housing mini series that's soon to come. And over to you, Favour, to do the final wrap up.
Yes, thank you very much. I believe it was Tony Stark that said part of the journey is the end. And so, yes, we're looking forward to our final episode. But for today, this brings us to the end of yet another enlightening episode in our Affordable Housing mini-series. With Andrew, we have been able to at least peel back the layers of what can be a complex topic, which is land titling. So a huge thank you to you, our guest, Andrew, for shedding so much light on this critical piece of the affordable housing puzzle. If you found this conversation valuable, please remember to subscribe or follow the Flywheel Economics podcast on your preferred platform and explore our previous discussions, because we've covered everything from regenerative agriculture to aid effectiveness. Now you can also find more resources and insights when you connect with us at Flywheel Economics across all social media platforms. We're on X, Facebook, Instagram, and LinkedIn. And also, don't forget to check out our website at flywheeleconomics.com. Thank you for tuning in. Until next time, this has been the Flywheel Economics Podcast.